What makes a property deal a good deal? There are 6 important characteristics that every deal have to be a good one. Stay tuned! My name is Fabrizio Cravero and this channel is all about property investment for UK and overseas investors. Those are some of the property investment deals that I receive on a daily basis. But how do I decide when to proceed with the investment? The majority of investors just check one thing, the return on investment. 10% return is better than 5%, right? Wrong. There is much more than that. There are 6 fundamental points to consider. First of all, it's about understanding the concept of buy to let. You might find some property really cheap, but if you can't rent it out, it is useless. So make sure there is a good and strong rental demand for that type of property in that particular area. But how can you tell that? I'm gonna show you now a little trick. And by the way, I'd like to ask you to subscribe to the channel because every week I share my experiences about property investment, like this trick here now. Have a look. You simply visit the website Rightmove and then you search for properties to rent. Let's have a look, for example, at this postcode, NE8, which is close to Newcastle, and then you search properties for rent. Now you can see that there are 78 properties in total to rent. Here in filters, you can see that this box include let agree, it is not selected. Without that, there are 78 properties on the market. That means that those 78 on the market, they are really available. If you check this box, you can see that the number now grows to 154 properties. That means that in total, there were 154 properties on the market, but 50% of it, as you can see, they've been rented already. That tells you that this area has quite a high demand. But now, let's compare it with another postcode. Let's have a look at L6, which is in Liverpool. We follow exactly the same process. We look for properties, and in total we can see that there are 149 properties on the market to be rented. Here in filter, we check this box and we see that the number goes up to 173. 173 including let agree. But how many are still available in the market? 149. So this tells you that this area in Liverpool doesn't have such a high demand as the other area in Newcastle. It is clear that in this case, that postcode in Newcastle has a stronger rental demand than the other area in Liverpool. And the next thing to consider is if you can get equity on the day you buy. That's always a good thing. I must say, it is not always possible, but if you can, that's great. Now, what do I mean by that? Let's say a property is worth £250,000, which is the average value in UK at the moment, and you buy it for £220,000. It means that in this case, you will have £30,000 instant equity, or 12%. That means that if the market goes down a bit, like someone predict will happen soon, even though that's not my opinion, but we can talk about that in another video eventually. If the property market slow down, with £30,000 worth of equity, you got a little buffer there. And also, if you want to refinance and take your money out, which is by the way a good thing to do, if you refinance the property and get your money out, to grow your portfolio, then the extra 12% you have, that £30,000 in this case, means you're going to be able to refinance and get a little bit more money out of the property. So, if you can buy with a bit of equity on day one, that's always a good start, and it is promising to be a good deal. And then, what about a positive cash flow? The cash flow is the difference between the income, which is usually the monthly rental, and all the expenses. That's where some investors tends to be a bit too optimistic. And by the way, also some agents. They tend to forget some or most of the expenses. You can check this video up here, where I analyzed a real life deal and I break down all the expenses. But make sure you take into consideration, of course, the mortgage cost. But don't forget to put money aside every month for maintenance. Then the insurance. Then maybe some void period while you're changing tenant. And then, very important, the ground rent and the service charge if the property is a leasehold. And then the letting agent fee if you are like me and you are either based overseas or you want a real passive income. So, after you deduct all the cost, whatever left is the cash flow, and this must be positive. You cannot imagine how many investors tells me, Fabrizio, I'm investing in property because of the long-term capital growth. Yes, UK is an island and the prices goes up over time, as you can see from this graphic here. And that's an extra reason why I'm extremely passionate about UK property. But I honestly prefer to be paid every month while I wait for the property price to go up. And by the way, I don't want to be overexposed to risk. And that's why if the property price drop, I won't worry. I just hold my property, and if I got some equity from day one, like I mentioned earlier, I will be even more relaxed. And actually, that's when I will have more money to buy properties at cheaper price. What I like to do is to observe the masses and then do the opposite. Where possible, it's great to be able to add value to a property. What I mean is, if you could buy maybe a slightly older property, then renovate it by putting a new kitchen, new bathroom, modernize the property with new carpet and paint, that would add a lot of value to it. The point is to spend less than the value that you add. That will allow you to get more money back out when you refinance. This is important because if you need to wait until the property prices goes up, you will expand your portfolio slower. But if you force the appreciation by adding value, you will have a lower capital invested. And that leads me to the fifth very important point for a good deal: having a low capital invested. If a deal has equity on it when you buy, because you purchase below market value, and then you also add value to it through the refurb, then when you refinance it and you get a mortgage, the amount of money invested will be much lower. And this happened by using my favorite investment strategy, the BRRRR strategy. The great thing is that the BRRRR strategy can be used by both UK and overseas investors. This is how I'm growing my portfolio and allow me to buy 6 properties within 1 year only. By the way, if you want to start to invest in property like the top investors do, soon I'm going to open the registration for a free training where I will explain exactly how you can invest in profitable UK properties just with your computer and without traveling to UK. There is a link down below in the description. Register there and you will be able to be the first to be informed when I open the application. But now, finally, the 6th point, a good deal should have a high return on investment. You see that this is the only thing that many investors consider, but it is not the only one. Now you know that you need to consider really all the costs to hold the property and to buy the property. Only then you can really compare different deals and pick the one suitable for you. And of course, the higher the return on investment, the better the deal will be, provided that this deal has all the previous characteristics that I mentioned. And now you know how to recognize a good deal. But if you see a deal with all those characteristics in place, what you have to do is to buy it very quickly. There are many investors out there regularly looking to expand their portfolio, and if you don't act fast, you will always be there dreaming only of investing in property. So, education is really important to understand what makes a good deal. And I'm here every week with new and free content for you. Subscribe to the channel and press the notification bell. Remember, invest with knowledge, create financial freedom, and I'll see you in the next video.